All right, let's do a little reflection today. So, reflecting back on this morning, I came to the markets late. I didn't do my proper analysis that I normally do. Usually, I'm at the markets at 5, 5:30 in the morning. I see what's happened overnight, previous day, go to higher time frames, and I work my way down. And then, at market open, which is usually when I try and wait to take any type of trades, I am usually um, you know, buying or selling momentum. And this morning I missed all of that at market open. The market got into this stagnant consolidation area right in here, and I just continued to try and force my will onto the market. And if you've been trading for any kind of time, you know that that's obviously not what you need to do. So very very bad trading within this time frame in this area, and I wanted to short it. So I wanted the price to come down. I was actually on a 3 minute chart to start with, and I was patient enough to wait for this right here. Ended up taking a short, taking a small partial here, and then out, and then took another short up in this area, a little bit better price. Took another partial, and then out at almost. I think I mitigated a little bit of risk. So definitely was a red day. The only good thing that I did this morning was realizing I was coming late to the markets. I did go to the micros instead of playing just the E-minis. So that was the only positive. But the lesson is if you don't go through your proper routine, if you don't have proper analysis, and you don't give yourself, ample time to really get into the flow of the market and see the candlesticks and what they're doing and the momentum in the market, even if it's slowed down, there's no trades. There's no trading. You got to restrict yourself in that, especially for me. This is for me. This is my reflection on my day. But I think there's a lesson in here for everyone that if you've missed, so I was not here at market open. I did not see this momentous move. And this is and then I got here roughly around this area, and I watched it just kind of play out right in here. And this is where I was basically looking to take trades. I had put a trend line down, and I wanted to see, kind of a break of that trend. And this is basically I wanted to see a break of that trend. When I got the break of that trend, the 21 EMA is way down here. So why I thought the trend line was just a perfect area to go short instead of waiting for the break and hold of that break below the 21 EMA. I don't know. No idea. I just wanted to get in. I felt like this was going to, as soon as it broke here, we were going to come all the way down into here. Like that's just what I thought and wanted the market to do. So I got in short two separate times, 10 contracts, took a small partial, a third partial off on each of those contracts, and then took losses. So I was, yeah, just just not a very good morning for me as far as trading. And then if you look out on the 5 minute chart, this is literally where I would have taken my long trade without this on the screen. Even if that trend line's there, knowing that we have not broke below the 21 we've held, when this candle engulfed this one, that would have been my entry right in there. Once it closed, probably would have taken, once this candle started to come back into it, I probably would have just went ahead and jumped in. Setting my stop down here, it would have been a pretty good stop. But that's when you're playing the NQ and you've been playing the NQ for a while, or even the micros, you know that you got to give it a little bit of room. And that's what I would have traded. In hindsight, that's clearly the way I would have traded. I would have caught that entire move. No. But normally this is where I would be taking the trades. The 21 EMA is there, so I don't take this short. And that's, I think I was just kind of blind to where this line was. And I saw this trend line, and that's the only thing I cared about. You go to the 1 minute chart, and it definitely tricks you into thinking, man, we're going down. So I was the trap trader today. And instead of really doing analysis and realizing that this is just one big stagnant consolidation, I wanted to force my will on the market, and you just can't do that. So lesson today, if you don't have proper analysis and can't go through your proper routine, there is no trading. I mean, imagine if you're a golfer. Professional golfers get up and stand over their tee before they hit the ball on the tee box, before every shot, really. And they have the same movement. They have the same thoughts. They go through that exact same routine in order to give them proper confidence in taking that shot. And if anything distracts from that, they back off and they start over. And I think that, mentally is probably one of the things that needs to happen all the time. And even as a trader. So if you look at a baseball player, he's got the same routine, creature of habits. Before they step into the batter's box, they're doing the same exact thing, tapping the plate the exact same way, spinning the bat the exact same way. And if that doesn't happen, they're not ready. They call time, they back out, they do it again because they want to get into that flow and that mindset. So as a trader, I'm always looking at the market early enough to really get a nice, not necessarily a bias of the market, but to really get a nice feel of how the market is moving. And I just didn't do that today. And because of that, I had a red day, and I will learn from this lesson. So hope this helps anyone out there. Have a good rest of the day.